Hello investors, traders, and Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your market update for Monday the 16th of December. Well, obviously we've got some good markets today in the indices. They're higher, but we'll be talking about those in just a moment. But this stock is a lemon, and we're talking about Lululemon, and we'll be looking at that stock in detail and how it relates very closely to another high-flying stock called Crocs. So let's get started right away. First of all, looking at the indices are up today. You can see we're up almost 1%, up 143 points right now. You can see our weekly came in at 15,791. It's indicating that the trend, at least the intermediate term trend, is somewhat negative, but not overall. The longer term trend continues positive, and you can see that with these ups and downs, but I think we could see this market make new highs. Moving on to our next market, pretty much the same picture with the S&P. You can see we've had these ups, higher, and finally we're regaining the upward move. I think we see this market as Santa Claus rally and close well for the end of the year. And why I say that is because of this index. That's the NASDAQ. You can see we have two green trade triangles. Never had a sell signal. We came right back down to support on the RSI. We're starting to go back up. I think we'll see the NASDAQ make new highs, and I think it'll be led by Amazon and Apple and Netflix. So moving on to our stock of the day. This is Lululemon. You can see all of our trade triangles are negative. And you can see the monthly kicked in at 66.10. It's 58.37. This market is in serious trouble. I want to show you exactly what I mean by that. So let's just scope this out to the max, what we see in this market. The big thing that stands out on Lululemon is this to me, is that we have had a bullish market for the last several years, and you can see how this market has really just sort of rounded out to go down. It really has a lot of distribution up at these high levels, starting from, let's just take this is all distribution. Someone's been selling the stock pretty aggressively when it gets up to the 75 area, and you can see the results so far. Now we can see this market, and I'll just show you what we're looking at in terms of our Fibonacci numbers. But if I put a Fibonacci indicator on here and draw it from the highs all the way down to the lows, you see that was a great buy right there, Lululemon. We can see a move back down to the 32, 33 area quite easily, just be in a Fibonacci zone. But I think it's going to go much further than that. I think we're going to see Lululemon in the 20s. I'm not sure how low it's going to go, but I think it's going to see it in the 20s. And I think with our indicator this way, I think they're going to have a hard time recovering from their sort of one-trick show, the exercise tights for women. I don't think they're going to have much more success going into other brands. I think that's the key, and much like the next stock I'm going to show you. So we're looking for Lululemon to go down, possibly to the 33 level, which is a 61.8% correction, and then possibly even to the low 20s, which takes us all the way back to 2009. So let's see how that plays out. So the next stock we're talking about is Crocs. A little bit different, but obviously you can see the really sharp rally of these, these shoes, those funky little shoes, had a huge sort of impact on the market, but they could never come out with anything else that was close to being that successful. One trick pony, much like Lululemon, and look what happened. We just went down, down, down. Nice sell signal here, and that was the buy signal. So a nice move up we caught with our trade triangles, but again, I think Lululemon's going to be very much like Crocs and move down regardless of what happens to the main market, and of course that is bullish right now. So let's clear the screen. Next market we want to look at is the dollar-yen relationship, and we have been bullish on this. You can see we picked it up really nicely on the monthly. The weekly is bullish at 98.95. We're currently at 102, some nice profits in there. Last signal was 103.33. I think this market can do better. I think we could see this market trade up to the 110, 115, even the 120 level, which takes it all the way back to the highs that we saw in 2007. They're going to push the value of the yen down. There's just no doubt in my mind about that. But an even better trade than this is this next cross we're looking at, and that's the euro yen. You can see, just looking at this, you've really created this huge base which is capable of taking this market much, much higher, really large base. And I would not be surprised to see, let's just draw that a little bit better, not be surprised to see this market go up and test the 165, 170 level where we are now. Take it back again to the July 2008 highs, which were right here. So that's what we're looking for in the euro, long euro. So you long euro, short the yen. It's just that simple. And that looks to be a very, very good trade to us. So let's move on. This is gold. I want to show you the big picture of gold going back to 2005. You can see our monthly trade triangle has been in place forever, and it continues to be very, very negative. Now we're getting down to an area here, this 1200 area, that is offering some form of support. Now I would not be surprised to see the market break through this area right here and move still lower. So I think that's something you really want to pay attention to. One thing you see on the RSI, we're back up to the sort of 50 level, which we know is a resistance area. In the past, you can see how it's worked right here and how it affected this market right at about these levels right here. So I think generally speaking, you can see that we're back up at resistance. I think we could push through. It'll be the final leg down, and I think it's setting the market up for a really interesting 2014. So generally speaking, the trend is your friend, and all the trends right now are negative for gold. The last market we're looking at is the crude oil, is the February contract, and as you can see, a couple of things that sort of stand out to me is we have our intermediate trade triangle is going higher, the long term is still negative, and the daily is also negative. Sort of a trading range gives you that 55. So an oscillator is the best thing to use at this point in time. And the oscillator we're using is the RSI indicator. We're back down to support right around the 50 level. We mentioned that before. You'll see a little turn up here. I think tomorrow, if we see this market go over 98, I think it'll be an indicator that'll turn our daily positive, and I think it's going to be another push up to higher levels. I think we'll see this market go over $100 before the end of the year. I think we're going to have some very cold, hard winters here in the Northeast, and of course that's going to require a lot of energy to propel the heaters in everyone's homes. Hey, I'm Adam Hewison. I hope you enjoyed this quick video, and I'll be back tomorrow or the next day with some other observations. But watch Lululemon and look at the similarity between Crocs. Till then, be sure to ask a question on our Q&A on MarketClub. Only if you remember, though. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.